Hello. Hi, this is Raju here. Firstly, I would like to thank you for attending this webinar, and I would also take this opportunity to thank FX Street for organizing this webinar. Okay, this session is going to be like taking full advantage of precise trading zones. Okay, and please try to make the session as interactive as possible because the more we ask questions and the more we are interactive, I think the more we learn as a group. Okay, basically, I just want to ask the first question. I would just like to ask you this question. How many of you are good swimmers? Okay, please try to be as interactive as possible because we are going to learn as a group because this is something new. I believe that many of you are already in the trading business, and there are some, I think, full-time traders, some are part-time traders, some are looking to enter into this business. So, like if you're a good swimmer, basically, if you're a swimmer, what you need to know, because I myself, I'm not a good swimmer, but whenever I jump into the pool, I would like to make sure that, what is the depth and what is the distance I'm going to swim. Because, that's something, which I always feel, that is something which you can tell yourself the confidence level, to get into the pool. For those of you who are if you feel that you are a really very good swimmer, again, it also depends that, if where you're going to swim, because sometimes, swimming into a pool and swimming into the ocean can be totally a different game. Because, and also why I'm posing this example is, trading is also a business whereby you need to learn this art, meaning learn the art of this trade well in order for you to survive well. Because what I believe is, a lot of people, they try to make it a quick way of learning, and also, they get burnt, and, either they have been kicked out of the business or they are totally gone broke. And also, what I also believe is, this business has got different types of traders. You have people who are consistently making money. There are some guys who are consistently losing money. There are some guys who are consistently looking for new ideas, trading ideas or trade setups. There are some guys who do not want to learn anything, but yet, they depend purely on luck. So for those guys who are consistently making money, this is how you should be looking. Basically, what you should be looking at, you need to have a trade strategy that really works for you, because end of the day, this game is all has to do with emotions and a game plan. See, because you can never be telling yourself that every trade I make, will be a successful one. And the winners are usually the successful people are those people who are able to manage the trades well. Meaning, in the sense, when they go in the wrong, they exit with a very small loss, or they exit fast. For those who are when they are making money, probably they would want to hold on to the trade, or they make consistent winning trades. And you must also look into, what is your risk reward ratio. Basically, I do believe, this is something that can turn your trading style. Basically, before you enter your trade, ask yourself, okay, what's going to be your a stop loss level, or to protect your capital, and what would be your returns. Because all these figures, if you know, then trading can be a very easy game, and things can be much more clearer in the long run. So this basically what we are going to teach you is, okay, we are going to do, because we have given specific levels, and basically the closer to the levels where you take your trades, that's where you can minimize your risk and maximize your profit. Okay, this is a risk disclosure. This is basically, you have to take note that this session is going to be purely on learning. Whatever you do is at your own risk, and do take note that, when you take risk, for those of you who are using real accounts, I suggest, you do a proper stop loss and exit point. And we would strongly recommend you to try it out on a demo account, because, as you go on, then your confidence level would get better and better. And also, you must take note that, like for those, I know many of the guys, who come into looking for new trading ideas, the first time they try, straight away, they feel that, if it goes in the wrong direction, then straight away they feel that, this thing doesn't work. Uh, you know, Trust me, like, every experts, they do have some strategies which that works nicely. And you must also take note that different groups follow different trading tools. Like, for example, there is some groups they follow on trend channels, some groups they follow Fibonacci, some groups they follow Elliott wave, Gann numbers, so on and so forth. So different groups will make money at whenever their tools working for them. So sometimes what happens is, when they are in the wrong, they exit with a minimum loss, so that at least they know that this is not that entry is not working for them, or and when it's right, then they bang on it, meaning they wait for a bigger profit. So this report, okay, this is a sample of the report which I'm showing you. Okay, this is the report that we published before 5:30 GMT, and basically you can use our report to take trades, and because this is where it tells you that where the market is expected to turn on specific levels. So I'm just going to spend the next few minutes explaining how to look at the report. Then after that, what I'll be doing is I'll be looking at live markets, and I'll be teaching you if there is any potential trade setup, we will discuss about it. And we mainly focus on about 37 crosses. Okay, all the majors against, I'll show you again what are the crosses we look at, and this is how, this is what we look at. Okay, this report, okay, on this example, we are looking at Euro USD. Okay, this is a sample report. Basically, this is how the report looks. Okay, we always put the previous close as our benchmark. The previous close, what we are referring to is the US closing prices. Because whenever the price is trading above or below the open, then we know that, okay, today is a buyer's day, or bull's day, or seller's day. That is just a first benchmark which you use it as a guidance. Like, for example, like today I think Euro has been trading flat, meaning from previous close. So this is one way to see, whether you want to be a buying side for the day or selling side of the day. So and also the trend wise, we focus on three types of trend. We pay attention to hourly, daily, and weekly, because we do have different traders looking at different time frame. So this hourly trend, basically, we look at this hourly trend. What it tells is, it just says on this example, it says sideways while 150.85 holds. So basically, what it means is that the wording here, it says either, usually it says sideways, sideways up, up, down, or sideways down, or so on and so forth. So whenever you see sideways, what it tells you is either the market is going to be choppy, or the market is directionless, or the market might be even waiting for some important data announcement, or it might be even a shortened trading days, or it can be any of the reasons. But whenever we mention it's a sideways, okay, it says while 150.85 holds. So what it means on this scenario here is when it's 150.85, the previous close is 150.05. That means it tells you there's a red color which also tells you that even though it's sideways, you should be looking for a selling or shorting opportunity. So as long as the price doesn't go beyond 150.85, then you should know that the market is expected to come down. And again, the safest bet, or the best bet would be when the price is approaching near that price levels, right? And not to worry, this is just an example which I'm going to show you. Then later on, I'm going to look at the live charts and explain to you, how it looks and how you can take your trade decision. And as long as the daily level is concerned, or the daily trend is concerned, it says sideways as well, while 147.20 holds. So that means, as long as the price doesn't go below 147.20, the price is expected to go up. So on this scenario here, the hourly is telling you, it's going to come down, and the daily is going to tell you that, it's going to go up. So overall is, you should be looking for a two ways which you can interpret this is either, you can go for a quick trade or fast trade. If it goes up, you can go for a short, or if the price approaches near the daily level, then you can go for a long, because you know that the bigger wave is going to eventually lead the smaller wave. And the weekly time frame is also tells you is, while sideways is 144.25, which is also, it tells you that, you know, it's a green color which denotes you. So it tells you that, you know, the price is overall, the direction is expected to go up, right? So, and we also have this critical resistance and critical support, which these are the two levels where you pay attention when the market is expected to turn down or turn up. Where if the price goes down, then, you know, you look at a critical support. If the price goes up, then you look at a critical resistance. You know, when it reaches, then you can expect the market to reverse. And we do have this target 1, 2, 3, you know, resistance and support. Meaning, in the price, in the event if the price is moving up, okay, you can expect the price or book your profit in any one of these levels, right? If you're shorted, then you expect to book in your profits with any one of these levels. So basically, these are the levels where you pay attention for a bigger time frame, and this is where you use it for entry and exit. And also do take note that whenever you use our levels, you know, for those of you who are following technical analysis closely, you should understand the fact or accept the fact that, you know, the previous resistance will become a support, and your previous support will become a resistance. So in other words, you know, when the price goes up, you know, like let's assume that the price has gone to 151.30, then when it falls back, the 150.65 would become your immediate support, you know. So if I miss that move, then I can wait for the price, or I can wait for re-entry at when the price reaches at this level. So these are the levels basically you use for exit levels. So what is that so special about our trading zones? Okay, this is what I'm going to explain to you now, because this is something which we have been doing for many years, and you know, especially we trade at levels. That's where it minimizes your risk, because I do not know how many of you take trades that you know that on the market orders, because we generally take orders, you know, we take entry at our specific levels, meaning in the sense, because that's where you can minimize your risk. Okay, this is the most important part in your trading zone. You know, this is where you take your trades, and this is where it tells you or minimizes your risk reward. So we have resistance zone 1 to zone 12, and we have support zone 1 to zone 12. Okay, basically this is where, you know, all these numbers are where you can look for entry levels, because this is where you can minimize the risk and maximize your profit. And basically how this report works is, when the price or when the last price is trading within the zone 1, okay, that means if, for example, let's assume the price is trading at 150 figure, you know, so that means it's caught within the resistance zone 1 and support zone 1. So we call this no man's zone area. So when a no man's zone area, we would not initiate any trade, because this is where you can get a lot of whipsaws, and you get a lot of you know, noises happening during this zone. So when the price is trading within this zone level, then that might put you off on unnecessary trades. You know, this will also help you to put you off unnecessary trades. So when I'm looking for a long, okay, basically I go long when the price is getting, you know, like above the zone 1, meaning in the sense when the price goes above 150.40, that's where I plan to initiate a long, and I can book my profit at, you know, when it breaks 150.40, I have my immediate resistance, which is 150.65. So this would be a minor resistance. Once this level is cleared, then you know that the next resistance would be 151.30, which is, we have another about 65 pips to play with. So overall is, as long as the price is trading above the zone 1, you should be looking for a buying opportunity. When the price is trading below the support zone 1, you should be looking for a shorting or selling opportunity. This is how you use our report, and this is where you can use any one of these levels for entry pertaining to, it depends, you know, when you enter when you're on the screen. And also we have a zone 5 and zone 10. Okay, these two we call it mainly a U-turn zone, because this is where you can expect a major resistance or major barrier for the bulls, in the event the price is going up. So in other words, I would be looking, that means I would be looking for a long. I can plan to exit in any one of these levels, either 151.30 or 151.55. Again, if it goes beyond that level, then the next resistance I would be looking at is 152. So basically, my entry points or my entry levels would be at 150.65, 151.30, 151.55, or 152 figure, so on and so forth. So when you do this entry at these levels, the chances are you would be taking a minimum risk, because like as I told you, I'm not a good swimmer, but whenever I enter into the pool, I would like to know what is the depth, because in the event, I do not have the stamina to swim, then, at least I know, okay, this is the depth which I can cover, or, how far is the distance. So these are the levels you can use as a guidance, meaning in a sense, if you know that the price is going to has dropped to a certain level, you know that, okay, the next major support is at this level. So when you take your trade, at least you know, okay, this is where your risk versus reward is going to be like. So this is how you use our report, and this is how you take our trades. So now what I'm going to do is I'm going to look at live charts, and I'm going to teach you how to look at the best cross to trade, or how do you choose the crosses to trade, because this is something, which you can look and play about. Okay, your questions wise, what I will do is, I'll answer all your questions towards the end of the session, because we have a Q&A answer session, because on that basis, at least, you can understand well. So whatever questions or whatever queries you have, please type it out, so at least I can explain to you. Okay, basically this is how I set my code page, because, when I do this, this is something, which you can look about it, because it's very easy, and when you understand how it works, things are much more clearer, because, I have been looking at a lot of oscillators, because I've been in this business for almost like 14 years, right? And this oscillators all, for those of you, I know that some of you are following oscillators, but do believe that, the oscillators is a lagging tool, because, especially when you do that, the signals will come in after that move happens. But occasionally the oscillators does give a leading role, but not always, So you must understand how do you look at oscillators and how you use it, because for example, when you use a moving average, you should know that, the moving average is a lagging indicator. So especially you can't use a moving average to project a price when the price is making a new high or new lows. But you can use your moving average when the price has hit a new high or new low. When it pulls back, at least you know that, okay, this moving average is going to act as a support or resistance. So this is how you look at the code page, and we are categorized into, like on specific crosses which we do. So one look at it, right now if you look at it, let's say I look at all those US crosses. So this is where, is the net change. Just bear with me. Okay, this is the net change. So if you see the net change, overall the dollar yen has got the biggest move from previous close. When we said previous close, we are referring to the US session or the New York close. So if you see this, 50 pips, the dollar yen has moved or strengthened by 50 pips. So overall, one look at it, if you should know, the yen is the strongest cross for the time being, because, like we are looking at Asian session, which has just commenced. So, you have 50 pips. So it's like, you should know that, okay, anything to do with yen or the yen crosses should be strengthening. Okay. So that means, like any yen crosses, for example, okay, I go on to the yen crosses. Okay. You see here, the yen cross, all the yen crosses are showing in red. Okay. Overall, it tells you that it's in red, which denotes that the yen is strong. So when you want to buy this cross, that means the yen cross, you have to think twice, because you should know that you are trading against the trend and against the strength. So, like if you're trying to have a pullback, especially if you're looking to have like 20 pips, 30 pips move, or like 40, 50 pips move, what you should be doing is, you should know that you are doing against the trend and against the strength, so you have to be extra careful. So your entry point should be quite precise, meaning in the sense you should know which level to enter, because you should know which level you are expecting the market to turn around or reverse. So till then, if you go and buy, I think you would be most of the time you would be stopped out unnecessarily. So getting back to this again, so as I told you, the yen crosses, which is very strong, and against all the yen crosses should be a shorting opportunity. But the only thing you need to know is whether is it being towards the end of that hourly trend which we are looking at, or it's just the beginning of the trend. You have to go back to the chart and to give you the guidance. So other crosses, if you look at other crosses all are pretty flat. So I would say that trading other crosses would be wouldn't be that rewardable, because you should know that once the price breakouts, because when the price is trading in a consolidated mode, or it's trading in flat, you can expect not a big move until the breakout happens. So you should be looking for a breaking out opportunity. Okay, so now what I'm going to do is, I'm going to look at tell you the charts and how do you look at the levels to take your trades. So okay, let's look at the example. Okay, right now, as I told you, the yen cross is being the best cross to trade. So here, among the yen cross, which would be the best cross to trade? So if you look at this, the yen is about 50 pips, and the next one is, if you see against that US dollar, I would say that the pound would be one of the ideal cross to look at. Meaning in the sense the pound yen would be a good bet, or the next one would be New Zealand, which is all quite close. So let's look at pound yen. Okay, what I'm going to tell you is, look at pound yen and look at the chart to decide or to plan your trades. Okay, this is the pound yen which we are looking at. Okay, just bear with me because the system is a bit slow. Okay, you look at this pound yen. Okay, basically this is how we look at 2 time frames. Okay, just I hope you can see my chart. Okay, yeah. So this is a pound yen chart. Okay, if you look at this cross, okay, this is a candlestick chart which we are looking at, and this is a 2-hour chart. So the pound yen, has fall down, meaning in the sense it has come down. Okay, and if you look at your RSI, it is showing about 38.9. Okay, which means that it has still got more room to go down, but the downside may be limited, because we have another previous support at somewhere at 145.40. So overall, if you look at this cross, okay, for example, this pound yen, okay, I'm going to tell you, because this is the zone 1 and zone 1, support zone 1 and resistance zone 1 for pound yen, which is right now is the zone 1 resistance is 147.60, and the support zone 1 is 146.90. This is like, as I said, because these levels are updated before 5:30 GMT. So, but just bear with me, and I'll give you the level so you can take down and you can use this level for your trade. So here on the resistance, meaning in the sense we have a support zone 1 which is 146.90, and our resistance zone 1 at 147.60 for the pound yen. So overall, I can look for a shorting opportunity on this. because I know that there is got more room to go down, and also, I also need to know what is my profit target, or where is the level where I'm expecting a turn to happen. So my immediate support levels for this pound yen is 146. I have one at 146.05, and another one at 145.75. So these two levels, okay, basically what it happens is, okay, I have to look for a shorting opportunity nearer to 146.90, and what I do is I plan to book my profit near 146.05. So what we will do is, okay, let's say I go on a 5-minute chart. Okay, if you look at this 5-minute chart, okay, this is a bar chart which we are looking at. So, this can be a trade setup which we can look for the day, meaning in the sense, right now it's trading at 146.40. So I would wait for some pullback to happen nearer to 146.90. That means, even at 146.75 or 146.90, these are the two levels whereby I would look to take trades. So here I'm going to look for a shorting opportunity, and my stop loss would be above this high, or even if you want to play safe, the best thing is put above your resistance zone 1. So when I do that, I know that, okay, this is the three levels which I'm talking that means I'm telling you your entry level, your exit, and as well as your stop loss. So what we will do is, towards the end of the session, I'll be giving, 1 or 2 trade setups for you to look around, and you put on your demo account and see, how it works, because basically, because we do not believe in entering at market orders unless if that market is trading at our levels, meaning that the specific zone levels. So that would be one of the way to minimize your risk and you maximize your profit. So here, this is one example which I'm looking at. So I'll look at one more example to show you to see another shorting opportunity, or we can do basically we do about 37 crosses, as I told you. So overall is for that Asian session, and you should also do take note that which crosses to trade on which time frame. Basically, when you are trading during Asian time, you should do basically Aussie crosses, yen crosses, New Zealand crosses. See, these are the three most crosses that are moving during the Asian time. So when you look at during the Europe session, of course you can focus on all those Europe currencies, and for the US sessions is almost all the crosses. So here, this one trade setup, and another trade setup which we can look at is, we can also look to short, all we are looking for is all the yen crosses. So the next cross which I'm looking at to short is euro yen. Okay, this euro yen, okay, right now is trading at 132.10. Okay, I hope you can see my chart. Okay, so this is 2-hour chart which we are looking at on the euro yen. So if you look at the euro yen, our zone 1 levels, meaning resistance zone 1 and support zone 1. Resistance zone 1 is 133.10, right? And support zone 1 is 132.40. So this is where, so the price has moved out of the zone 1, meaning in the sense, like as I told you on the example early on, right? I told you early on that, we were looking for a shorting opportunity once the price goes below the support zone 1. So here, my immediate profit target are 131.60 and 131.35, right? So these are the two levels I look to and exit. So here again, if I look at the chart, okay, I've drawn a line on this levels. So here right now you see that the price is consolidating around this levels. So this my entry would be at 132.40. That means looking to short near 132.40, and my stop loss would be above 132.85, which is about 40 to 45 pips. Or even, for aggressive traders, you can put above 133.10, because the chances are, as long as the price doesn't go above 133.10, you are bound to see the price coming down. So, and I plan to book my profit at 131.60 or 131.35. So these are the two trade setups which I am looking for today, because, and also you should know that you should be trading on, like only when the market moves. I know a lot of guys, like you use, like you look at, you enter at market orders, meaning in the sense, because you should know that you should always trade the market, and you should not be looking at trading at your levels or what you expect the market to do. Okay, what I'm going to do is I'm going to show you our trade entry. I told you earlier on, that pound yen. Okay, this is pound yen right now is trading at 146.40, right? So we are shorting. This is a limit sell, meaning in the sense we are selling at a limit sell, which is at 146.90 or even 85 if you feel you want to take a trade. And your stop loss can be, because the high for the pound yen is, just give me a minute, okay, it's 25, right? So probably you can put at 147.30. Okay, and my exit level would be 146.05 or 146.05. But like for very conservative traders, okay, you can plan to exit at within that 146.40, meaning in no sense we make about 40-45 pips. So this would be my trade setup. And the other trade setup which we are looking at is euro yen, which I said we are looking to short at again, this is a limit sell at 132.35. Okay, and my stop loss would be 132.75. And I would plan to exit at 132.05. Sorry, just give me a minute, It's 131.60. Okay, that is for aggressive traders, and for conservative traders, you can plan to exit at 132.40. Right? So these are the two trade setup which we are looking for. This is what we would be doing. Meaning in the sense, we look at possible trade setups. Okay, then we would look at our entry, exit, and stop loss level. Okay, and also do take note that try to do it on a demo account and see for yourself. See, sometimes what can happen is, sometimes like trading is a game whereby there can be a lot of frustration, meaning in the sense like sometimes when you take your trade, you put in your order, sometimes your orders can miss, but the market can move in your direction. Or sometimes what happens is, like sometimes you take a trade and you put your stop loss, then your stop loss might be hit, then the market moves in your favor. So these are the two types of usually the more common frustrating experience which most traders have. But you must understand that as long as you have a game rule or, or a game plan to follow, and if you do it consistently and consecutively, meaning in the sense you do day to day, then your emotions would be at bay, meaning in the sense you do not get emotional when the price moves against you, or you're being even stopped out, because you must understand that our goal is to protect our capital, and at the same time to stay in the business in the long, meaning in the sense, if you do not protect your capital, then you would be kicked out of the business. Okay, now I would like to answer the question and answer session. Okay, just to quickly, just to see, I hope, you understand how it works. And for those of you who are looking totally new, because I know this is the first time you have seen this, so you might get a bit confused, or you might get a bit weird, but as you go on, I think you would understand what we mean by that. Okay, I have a question here. It says, how often do you update your precise trading zone? Okay, this precise trading zones, okay, we do our report is updated before 5:30 to 6 GMT, right? So we use these zones, and we also give that specific levels for our clients to basically to exit and enter and exit. And we also have a US session update, because this is something you need to also keep yourself updated, because sometimes I do not know how whether you have experienced this. Like during the Asian session, you have that the dollar strengthening all around, then Europe session, the dollar weakening all around, so it takes turns, so overall is you need to tell yourself that okay, this is the zone which I'm looking forward to, and keep yourself updated. So we do have one more session updates for US, and also that the entry, the zone 1 and the zone 1 support and the zone 1 resistance levels, this levels can put you off on most of the time on bad trades, meaning sense because especially if you are a very conservative trader, then I would suggest, because because I know a lot of clients, they do get emotional the moment when the price starts to move, and you must also know which is the best time belt to trade, because sometimes certain time is very fast. It gives you a lot of moving, meaning in the sense like the market gives you a lot of opportunities. But sometimes what happens is the market is dead quiet. So on that scenario, you must discipline in such a way that you put yourself off, meaning in the sense, don't force yourself to take trades when the market is quiet. Okay, I have another question. Okay, what is the GMT time for the US session? Okay, this GMT time, you're right, it's in the region of about 12:30 to 13 GMT. The session comes before US market comes in, because see, we always tell yourself or get yourself prepared before the session comes in. Like we do update on our report is before the US session comes in. So at least when the US session comes in, you know what to do or what to look forward to. And also we have like the report wise, we have a section 2, with that's where you see it on FX Street, whereby we will tell you on words what to look forward to, or like what to do. This is basically for beginners who have never tried the report. But if you are already experienced trader, you are in the business, then if you get these numbers, then you should know that okay, this numbers is where I want to put in my trades, and it can be quite reliable, right? Okay, for update, that is I didn't get your question. Okay, so I think today we had this session. Okay, of course I've given you this signals to look for, and as we go on, because see, you must understand that the more interactive you become, the more things we would learn as a group. At the same time, like we can look for more trades or more trading opportunity. So, if you're being quiet, then, this is what, and especially when the market is quiet also, we have to take note that we can only trade, at the market and not, at your emotions. Okay. So any other questions? I think, if you have no other questions, I would like to take this opportunity once again, thank you for coming to this session. And I would also to take this opportunity to thank FX Street, because they were also given us this opportunity to do a webinar for them. And I look forward to get you guys in the near future, because because I think there's a lot of stuff to learn, because at the end of the day you must understand that different experts will have different game plan or different strategies. So and I do believe that everyone has got his own advantages and disadvantages. So I'm just looking forward to get you back again in the next section, right? So with that, I think we conclude today's session. Okay. Once again, thank you very much, and look forward to see you again. Goodbye.